Good afternoon, this is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, the 29th of May, 2007, and let's take a look at the S&P 500. The Spiders finished with a gain of 50 cents today at 152.19, up 1/3% as they continue to recover, although on light volume once again. And Friday we had lighter volume, most likely due to the holiday. And today I think a lot of people are probably off as well. This could be the start of a just slower summer season as far as trading goes. Just to refresh your memory where we are, the market seems to have found support along this 38.2% retracement of the highs that we saw being attained in mid-April, and then also the rising 20-day moving average. So we've got the recovery in place here, and the market came right up today a couple times to the 5-day moving average that we see here on the 10-minute time frame. It's important to see also that the direction of that 5-day moving average is lower as well. So that tells us that, as I said Friday, we want to go slow in the short term because the trend really isn't that clear. We've got the potential for resistance up here where this prior support was at 152.50. Also, we've got that resistance from the 5-day moving average, it appears. And another thing to look at is this Fibonacci. If we take a look at the highs from the 23rd to the lows the next day, you can see that it came right down to that 2/3 retracement of the downward move. So actually, and another thing to look at would be the pivot lines. Today's highs came in right around daily R2. So there were a couple reasons for the market to potentially find resistance near that 152.50 level, and in fact it did. So 152.50 is going to be our most important level of resistance going forward that we want to be aware of the next day or two. I should say potential resistance before someone emails me. But it is potential for resistance at 152.50 because we have had resistance in that area today, as well as the prior support and the Fibonacci and the other things that I pointed out. So still want to be a little bit cautious. I think that if today's lows get taken out, then there's the potential for a little bit further downward pressure, perhaps a test of that 20-day moving average again, and the top end of this range right here near about 150.75 or so. So I'd say just we continue to be in an extended market to the upside. The trend, however, is higher. It doesn't mean there will be a reversal, but we did break that trend line. Trend lines don't mean reversals, but a lot of times they're the early warning towards that. So we'll see if what happens here over the next couple days as things shake out a little bit. The Qs, as I've been saying in here, the best level of support really is near that $46 level, and that's where we got the bounce from off of last Thursday's sell-off. Last Thursday's quick and severe sell-off, and you see that again, that came on big volume. We've had 2 days of light volume, and you would have expected maybe today's volume picking up a little bit more so because Friday was the holiday, but we didn't see that. So although the market's higher, there doesn't seem to be a lot of conviction quite yet. So continue to be a little bit cautious. Same thing here, declining 5-day moving average, and this Fibonacci area also came into play today at that 5-day moving average, so that the 61.8% retracement as well as the 5-day moving average were a couple reasons why people might have halted their purchases or added new sales, so affecting the supply and demand. So it looks like in here 46.85, 46.90, that's the level of resistance that needs to be taken out for the buyers to really kind of gain back control once again. Otherwise, we're going to have to look at this breakout from last week that did fail as something that might lead to something more severe on the downside. A lot of times I like to say from failed moves come fast moves. That's not my saying, but I like to quote that saying, that this could have trapped the buyers in up here. So a failure below 46.40 I think definitely leads to a test of the 46 level, and below 46, then it looks like the next area would be this 50-day moving average down near about 45.5 for potential resistance. Semiconductors have been the weaker group here over the last couple of weeks, but again, I'm going to point out on the weekly time frame that they're at an area where they should find support if this market's not going to just completely fail. If they don't find support in this area over the next week or so, then I think we've got to look at these semiconductors as potentially a big failure pattern. So I do still think, though, that we give the benefit of the doubt to the buyers because we have a rising 50-day moving average. It came down. It tested that. We're close enough to it to consider it a test the last couple of days. I'd like to see a little bit of a move below last Thursday's low, and then maybe come in and form a divergence on this MACD on the hourly time frame. But again, look at this 5-day moving average. Guilty till proven innocent. So we want to see, well, although we're seeing a little bit more sign of accumulation here and these higher highs and higher lows, still want to give the benefit of the doubt to the sellers, on the short-term trend until we see that 5-day moving average flatten out and start to curl higher again. Ideally, I'd like to see a move down towards about 35.75 and then a turnaround from there. That'll really do a good job of trapping in more people on the short side, and longs really throwing their stock away and preparing the market for another push higher. Again, that's just one potential scenario. It's not necessarily what I'm calling for. It's just something to be aware of. The IWM, we had that breakout past the 83 level that we've been watching for quite a while. That breakout occurred last Wednesday, but then it failed, came right back into this range. Now it seems as though 81 to 83 is once again the range, although we closed above it today, and with a little bit bigger volume. So we closed at 83.28. This market gained almost 1%, which again was one of the strongest. It was the strongest of the 4 markets that we look at. So this group continues to be where the strength is, the mid caps, that is. So still, I think that we've got to be a little bit cautious in here just because it's very choppy in the short term. Let's take a look at the stocks we've been mentioning. TASR, we got involved at 9.32 last week, $9.32 right here last Monday. On Friday, I'd suggested selling half your position at $10.40 and then raising the stop on the balance to 10.18. We kept that in place over the weekend. Now I'd say you want to raise your stop to $10.36 on that remaining half position in TASR. United Online, UNTD, we wanted to buy this above 16.40 today. It ran 40 cents real quick. Hopefully you took a little bit of it off. If you didn't, then I'd say instead of a stop at 16.18, we want to have our stop now at $16.26. Presstek, looks like I was early with those call options, but didn't buy any stock, and hopefully you didn't either, because what we were looking for was a move above $6.95 before we were to purchase it. So a move above $6.95, I still think you want to keep your eye on Presstek, but officially no trade today. Akamai was the one short sale position that I had mentioned over the weekend, and Akamai, I said that we wanted to get short below $43 a share. You had plenty of opportunity to do that, and it came close to stopping us out. This high right here was 43.35. Our stop was 43.38. So that was pretty darn close to getting stopped out, but it wasn't stopped out. So now I'd say lower your stop down to about $42.38 in shares of Akamai.